As if we haven't had enough talk about the future, we're going to be addressing the future of cryptography and Bitcoin and future developments here with people who really know a lot about this subject. By the way, has this conference not just been amazing? Have you loved it? Yeah. I've been so thrilled. I've been to a lot of conferences in my life. This has been, #1 most mind-blowing experience that I can ever remember. So, thank you for all being part of it. So, our last panel, Charles Hoskinson, and you run a service, Charles, called, what's the name of your service? No, but beyond that. What is it? BitCheck? No, but there's an educational service. Yeah, Bitcoin Education Project, which I still need to contribute to, right? Right? Someday? Okay, right. And you've got how many videos up there? Like 47 educational videos. Yeah, okay, fantastic. So I'll just introduce Charles now. We'll be talking about a new approach to Bitcoin exchanges.
Well, hi, I'm Charles Hoskinson. Some of you might know me from the Bitcoin Education Project in my Udemy course. Other people might know me as the chairman of the Bitcoin Foundation's Education Committee. And probably nobody knows me as the Chief Executive Officer of Invictus Innovations, because we're a relatively new and crazy company that tries to do insane things like boil the ocean. So the title of my topic today is about how we price Bitcoin to US dollars. And it's actually more general than that. I'm going to talk about how do you price anything at all. So let's talk about US dollars. We love this notion, we say it a lot at the office, that some US dollar is more equal than other US dollars. And there's a very subtle picture right here. No, it's the other projector. Very sad. All right, so let's talk about paper US dollars, bank US dollars, Mt. Gox US dollars, and Bitstamp US dollars. So let's kind of go through them in terms of some criteria. So let's start with insured. So what does that mean? That means if something bad happens, you have some sort of backup or guarantee. With paper, no, you've lost your money, right? With banks, there's FDIC, Mt. Gox and Bitstamp. They may offer something, but generally speaking, no. Exchanges get shut down. Do you have access to your money? Well, if you have cash, yeah, you always have access. It's sitting in your wallet, it's in your pocket. One would hope you would be able to pull the money out. With banks, you have ATMs, wire transfers, and generally speaking, you can move money around. Worst case scenario through exchanges via wire transfers. And there's been some great innovation in the space to make that work better. Confiscation risk. So unless I come and beat you up and steal your wallet, it's pretty hard to go ahead and steal your money, right? If it's in your wallet, if it's in your pocket. But with banks, Mt. Gox, Bitstamp, and we've seen a lot of exchanges experiences, there is definitely a possibility that somebody can take your money. Somebody can shut your exchange down, confiscate millions of dollars. KYC. There's a lot of people in this room who have to deal with that, and that's probably a fun and exciting experience. You don't have to deal with Know Your Customer with cash. It's a beautiful anonymous system that we all love and admire. And interest. Well, that's kind of an odd term. What do I mean by that? The interest, there is no interest for money in your pocket. You don't earn any return on that. Put it in the bank. I guess we used to make money on that, but we now make a little. And for Gox and Bitstamp, no. And spread. So how much can I buy it for and how much can I sell it for? If you ever use local Bitcoins, you probably experience pretty high spreads. And politics. What's that mean? It means where is my thing located? Cash really doesn't matter. You can move cash anywhere, spend cash anywhere. It just depends on who wants to accept it. That said, banks like here in Atlanta, they're in the United States, so they're under US political jurisdiction. They have to follow laws there. And Mt. Gox is in Japan, and Bitstamp is somewhere fun. And then we take a look at the trading speed. So if you're dealing with paper or local Bitcoin style exchanges, well then, it's pretty slow. It's human speed. In terms of Gox and Bitstamp, software improvements can basically put that on par with Wall Street's high-frequency trading. So all of these things aggregate together to go ahead and produce price points for US dollars to Bitcoins. Okay? So in terms of Mt. Gox, when we made this presentation, it was about $145 you'd have to spend to buy a single Bitcoin on their exchange. And for Bitstamp at the time, it was $123. There's a pretty big inter-exchange spread, isn't it? And you can see local Bitcoins is even worse. So let's go ahead and talk about the structure of a currency exchange, and maybe we can kind of discover why we have these kinds of issues, why these spreads are so big, why we have different prices throughout the entire ecosystem. Okay, well, what an exchange really does is first it's a store of value. You take your money and you put it into the exchange, Then you trade with lots of other people, and you haggle and argue, and if you're on one side, maybe you make some money. If you're on another side, you lose some money, but you discover a price point. So there's a price discovery. And trading happens rather rapidly. You don't really have much choice over how fast it happens. It's just whatever the software of exchange permits. So there's your store and your trade. But there's something interesting about this entire process if you're using an exchange. It's trust. And sometimes that doesn't work so well. So let's talk about how we buy money on exchange. Let's walk through this process very carefully. So the first thing you do, you take your US dollars, whatever they may be, they're in your bank or in your pocket or whatever, however you get it, and you exchange your US dollar for an IOU from Mt. Gox, or whatever your preferred exchange may be, okay? And that's slow, it's expensive, there could be KYC regulations depending where the exchange is at. Then you take your Mt. Gox US dollars and you buy Mt. Gox BTC. You're not buying Bitcoins. You're buying an IOU from the exchange to honor and give you Bitcoins at some particular point. But as we've seen, that can be problematic because you can have daily and monthly withdrawal limits, you can have frozen accounts, and again, there's know your customer. That never quite goes away, does it? So what we did at Invictus Innovations is we took a step back and said, is there a better way to do this? Is there some sort of concept, some sort of thing floating in the ether now that we have this magical Bitcoin stuff that we can reimagine the way we price things? And we thought about it for a while, and we said, yeah, you know, those prediction market things work pretty well. They look pretty good. Let's go ahead and play with those for a bit. So what the heck is a prediction market? Well, turns out you can actually speculate on who's going to win the Oscar or how much money a box office hit is going to make. You can speculate on the value of a patent via prediction markets. You can even go ahead and bet on elections. And it turns out that when your information is globally available, everybody has access to it, it's very plentiful, the predictions actually end up being tremendously accurate. They predict elections 9 out of 10 times. I think 32 out of 37 of the last Oscar winners. They get it right more often than the experts anywhere. So we said, that's super cool. Prediction markets look awesome and amazing. So could we like build some sort of super awesome, amazing prediction market to give us global price transparency? And we said, shit, let's do it. So let me introduce bitshares. It's our flagship product. So basically what bitshares is a crypto equity. And it's a blockchain-based prediction market that we've built from the ground up. Every single piece of code we're writing, it's not a fork of Bitcoin. It pays dividends from transaction fees. And it creates this new type of derivative financial product. It's called a bit asset, so you can have BitUSD or BitBTC. And by doing this, you now can have collateralized shorts and options. So that means you can trade Bitcoin with short sales, you can trade Bitcoin with options and longs, and this is all supported in a decentralized peer-to-peer protocol. It's completely trustless. It's based on a blockchain. No central point of failure. And why is this important? Well, what it does is it removes politics, geography, and corporate actors from your price. There's a reason why there's a differential in price between Mt. Gox and Bitstamp. That's about the faith of regulation. I read an article today, it said it takes 22 months on average, they're estimating, to get your money out of Mt. Gox and get it to America. That's why there's such a big exchange spread differential between Mt. Gox and Bitstamp. What BitShares does, it gives us a global universal price, not just for cryptocurrencies, but actually for anything. Currencies, commodities, ideas, and even things you can't really trade. So now let's go ahead and look at this again, and let's get an idea of how we're going to get that true price of Bitcoin. So let's look at BitUSD. We don't need insurance because we're based on a blockchain. It's completely trustless and faithless. You always have access to it as long as you have access to your private key, just like a wallet. There's no confiscation risk unless somebody steals your private key, so I guess it's the same as someone stealing your wallet. KYC is technically impossible. It's like KYC on Bitcoin. You can't KYC a protocol. You KYC central points of failure, like exchanges. Because of the dividend system we've envisioned, it actually has a fairly high ROI on the bit assets. The spread, because it's a global ledger, very deep market, is going to be low. Market makers are enjoying very small spreads. I guess they're not enjoying that, huh? And it's politically removed because it's completely global. It's completely decentralized. There's no nation this is hosted in. There's no central point of failure. And of course, the trading speed is going to be a little wonky because we're based on a blockchain, so trades are done in aggregate of 5-minute blocks. And I'll talk about that in a bit. So that gives you the price of US dollars to BitShares, this perfect pricing metric. And you do the exact same thing for Bitcoins, And those two things together provide you a perfect true price for US dollars to Bitcoins, or for that matter, US dollars to anything, with politics, geography, and corporate actors removed. That is your true price discovery. So let's look at the new paradigm, the new perspective on exchanges given all this magic. So we now have a universal store of value, and we have a very natural trading speed as a result of that universal store of value. Via BitBTC and BitUSD, our conjecture is these prediction markets will market peg the value of the instruments to the real life things they represent. So our belief is that BitBTC and BitUSD will always represent the value of the assets that they say. So BitBTC should be somewhere around the value of a Bitcoin, and BitUSD should be somewhere around the value of a US dollar in terms of bitshares, okay? But they pay dividends. So basically, this is a decentralized bank in a box. And also, it's got a lot of really cool stuff. So anyway, there's my BitShare symbol that we have. We're not, you can see we're mathematicians and computer scientists. We're not really artists. But that's our official BitShares logo that we've come up with. And what we really see is this sitting as kind of a top level, or like a protocol level, price discovery zone that exchanges can plug into. So Mt. Gox can plug into this, Bitstamp can plug into this, all the existing market players can plug into this, and they can implement high-frequency trading on top, or people can trade with just their clients, which we're building and we'll be discussing momentarily, and do it in a completely decentralized way with no central point of failure. So how do you get your money in and out of BitShares? How do you do fiat to cryptocurrency? And this is really where the magic of Ripple, PAUV, local Bitcoins, and other implementations has come into play. And actually, central actors are doing a pretty good job right now. They're growing rather rapidly. You can use decentralized products to go ahead and move your money from cryptocurrency to fiat. And now we actually have a natural price discovery, so that process is faster, it's better, it's more transparent, and it works well. But there's one thing that would stop us from doing this. We need to work with people. We're trying to boil the ocean. This is a very difficult project. We're building our own blockchain from the ground up. We're implementing a lot of technology that right now exists in white papers or exists from forum posts that we saw, we looked at, we tested, and we played with. And we said, this is super cool. But we as a company can only build part of this. And there's a lot of actors we'd love to work with, collaborate with, and partner with to help us realize this dream of a single prediction market that is totally decentralized, divorced from government, and gives us access to true prices for everything, whether it's ideas, cryptocurrencies, or other assets. So I love this quote from Benjamin Franklin. He says, "We must indeed all hang together, or most assuredly we shall all hang separately." And I like to believe this with the cryptocurrency community. I need you. And Dan's going to tell you about the grand vision of where it's all going to go. Thank you.
So at Invictus Innovations, our goal is to provide decentralized solutions to centralized problems, wherever there is a centralized problems, and we have many of them in our society. So what is centralization? A lot of people like to throw this around and like to talk about being decentralized, but I thought long and hard about it and came up with a new perspective on it. Centralization is the concentration of trust of the many in the few. There are several types of centralization. There's when you trust someone else to store your money, to honor your domain names, to provide your courts or your justice systems, to be your exchange, to transfer your money or provide your identity for email. And then there's soft centralization. These are the Facebooks, the Amazons, the YouTube. They can't steal your property, but they can censor your content. They can deny you service. And they're concentrated repositories of information that can contribute to identity theft. So why do we have all this centralization? Because it's hard to know who you can trust. And so we all take the easy way out, and we trust someone everyone else trusts. There's a philosophy there, too big to hide so that we can trust them. The cost of centralization is often much less than the cost of decentralization. And this is because there's a lack of cost-effective decentralized solutions. So what we're doing at Invictus is coming up with cost-effective decentralized solutions. So let's look at what's wrong with centralization. With great trust comes great power, and the secret violation of trust can be extremely profitable. So you have wrong motivations, wrong market forces working here. The violation of trust is very costly to those who have misplaced their trust. And with concentration of trust leading to great power, absolute concentration of trust results in absolute concentration of power and therefore corruption. So it's imperative that we decentralize things in order to prevent corruption in our society. So there's a paradigm of shift going on in trust. It used to be the bigger you are, the more you can trust them, because their reputation's too big. But they're too big to quit. So when they're approached or compromised, or their shareholders demand it, they will sell out their customers if they can get away with it, and they can even be forced to do so in secret. But LavaBit has given us a new principle that shows that small decentralized solutions are small enough to quit, and therefore they have greater potential of trusting their services than the larger, more centralized solutions. So let's look at the internet today. Every single company you do business with, you log into with a password, often the same password for most people who choose ease of use over security. This password's going over an SSL connection, which is once again concentrated in the certificate authorities. Every business has your credit card information, your address, your identity, your password. They have it all, and it's all over the place. And as a result, a compromise of any one of these organizations can result in identity theft. We'd like to do something about this, and we believe we have some very innovative ideas. So the first step is to decentralize your identity. So we've created a new blockchain. It's not a cryptocurrency, but allows you to map a name to a public key, which can also serve as a Bitcoin address. Names cost about 1 hour to mine with your CPU every year. Of course, you can contribute more time to your name and gain greater reputation points. So it's sock puppet resistant. For the first time, you cannot create as many accounts as you want, because the creation date and the amount of CPU effort you've put into your name is a way of filtering out sham accounts. And we wanted this to be decentralized, which means it has to be cost-effective in terms of bandwidth and storage. So we designed it to support 1 billion users with just 4 kilobytes a second average bandwidth, and at full scale, less than 100 gigabytes on your hard disk max. So this is not a currency. Your names are not transferable. Once you have a name, you can renew it for as many times as you want, but you cannot transfer it. So there's no benefit to attempting to squat on names. So what can we do with this? Well, we're creating a product called Coyote that's going to have mail, chat, VoIP, and many other communication protocols built into it down the road. The key here is that you don't have man-in-the-middle attacks like Skype could have, and you know who you're dealing with, you know what their reputation is. You can send Bitcoin to a name. With your Coyote ID, you no longer have to exchange Bitcoin addresses ever again. The Coyote wallet, which I'm getting to in a second, will be the first Bitcoin wallet that you never have to enter a Bitcoin address in. And yet it will use a different address for every transaction. You can now log into websites without passwords. Anyone with an account with Bitcoin Talk will appreciate the benefit of this. Not only can you sign up for an account, you don't have to worry about sock puppets on the forums you're using. All your forum posts can be signed. And the website never has the password. You never give it to them, and yet they can still authenticate you. And it's one click. You never have to type in your password. You can build a web of trust where you can sign different people's identities, certifying their skills or who they are. Decentralized forums, I already addressed that. And the last thing you can do is you can do automated know your customer registration. If you pay someone like VeriSign or some of the companies we've talked about today to verify your Coyote ID, and we can work with the regulators to make sure that you can delegate Know Your Customer to a third party. You can then create an account with Mt. Gox or Bitstamp or any of these other companies instantly without having to go through the whole Know Your Customer process all over again. This should be able to provide massive savings to the Bitcoin ecosystem. So we're going to start a beta this December. The code's already in our repos if you wanted to check it out. The blockchain is designed and done. It's just working on some minor details. So I addressed how we're going to solve identities. But you also have to do domains. Domains are for businesses, e-commerce. So I want to talk about the next generation DNS. This is an alternative to Namecoin that I believe solves some design considerations that I don't approve of. So it's a new crypto equity called a domain share. I call it a crypto equity because instead of being a currency, it's more like shares in a company that's issuing names. And by owning it, you earn dividends. So it pairs names with an IP address and a key. So this replaces all your certificate authorities in a decentralized manner. So all the domain names are initially auctioned. So you go to buy a name, you place a bid, but it's not yours. Anyone can bid you up, and you have to go 3 days without a bid before you have it. The proceeds from the auction then are paid to the shareholders. As a result, it's actually profit to bid names up, and kind of like Price is Right, where you want to bid as high as possible without going over, and you can make some money. And if you own domain shares, then you earn a return. So it's more profitable to hold a domain share and earn dividends on every name than to pick one name and squat on it and hope someone wants to buy it from you. It is also expensive to buy 1,000 names because they're all going to be bid up. So why own one name when you can get a cut of all the names? So I believe that this is an innovative solution to the domain squatting and registration system that also provides profit-based incentive to allocate the names to the resources that are most productive. So the benefits here is it ends domain seizures, replaces SSL certificates. You no longer have to worry about man-in-the-middle attacks there, and it eliminates domain squatting. We think these are major innovations. And we're hoping this will come sometime next year. So let's look at the next generation internet. This is our long-term roadmap. We'd hope to work with people here in the greater community to make this thing a reality. But the goal is that there be a single piece of software on your computer that's entirely decentralized. Your password never leaves your computer. You never give it to anyone. Every business you interact with operates on a need-to-know basis. They deal with your coyote ID. You never give them your personal information. In fact, only VeriSign or whoever your identity, know your customer provider is, would have that information. Not even your bank would necessarily have to have it all. Of course, that depends on regulations. You can do e-commerce with businesses on eBay or Amazon. And you can decentralize shipping, so only the shipping company needs to know what your address is, which provides a whole new level of security. And we believe that this combination of things will completely reshape the internet and have your wallet, your web browsing, and your communication all in a single app under your control, entirely decentralized. So this is a screenshot of Coyote, which is our GUI that we've been developing. And there's one more thing Charles would like to share with you.
So part of a really good software experience is just not the software itself, especially when you're selling security, because you're only in control of the software you write, not the operating system, not the hardware. So coming in 2014, we are going to couple our elegant, beautiful software with some really cool, really beautiful hardware. Thank you.
My name is Adam B. Levine. Like I said before, I do a twice weekly show called Let's Talk Bitcoin, and I also, it's really important that we solve the problems that are in front of us, because there are a lot of problems. And I think that they're solvable. And so that's actually what I wanted to kind of talk about here, is how we're solving some of these problems and how it's happening in a way that doesn't require permission, which means that it's happening really fast. So things move fast in the world of cryptocurrency, and since I started Let's Talk Bitcoin in April of 2013, we've seen regulatory compliance that completely reversed the compliance landscape. Companies come and go, and we've seen the conference scene completely explode, with at least one a month and sometimes as many as 4 a month happening all over the world. Over the last few days, we've seen the apparent demise of the Silk Road, the ubiquitous Bitcoin illegal stuff market, and the arrest of the man accused of operating it. And the price just was crushed. And then it wasn't. Why is that? So, Mt. Gox, right? The elephant in the room when it comes to centralized Bitcoin exchanges. In the crash and the week-long freeze about 2 years ago, some of you might not have been in the community at that point, but there was complete chaos. Nobody knew what the price of a Bitcoin was, and most people had their Bitcoins tied up. It was a terrible situation. Because the single exchange serviced a huge majority of Bitcoin's transactions, it was both an incredibly lucrative operation, but also a huge central point of failure for not just trading Bitcoin from one currency to another, but how we get the price in the first place. Bitcoin Talk. For a long time, it was the Bitcoin community. It was the place where people went to meet the community, to educate themselves, and to kind of dig into this project that we call Bitcoin. A couple of days ago, it was hacked, and when I checked it this morning, it was still down. There are a few similarities between these three events. First off, they're all controversial sites. They're ubiquitous, but everybody loves to hate the front runner. And amusingly, the Silk Road of those three companies probably has the best reputation. They also don't matter. Now, a year ago, 6 months ago, this would have been a very different conversation, a much more depressing topic. But the free market's at work here, and while in the past these events would have crushed their various niches, and that's contraband for Silk Road, price and liquidity for Mt. Gox, and community and thought leadership for Bitcoin Talk, their success actually catalyzed and incentivized the next generation. So what we're seeing is that these high-profile, ubiquitous, and in their own way centralized operations are arguably just as dangerous to their users as new players. They may have more reputation, but that makes them a more tempting target for both bad actors, just as it does for new users. Even in these fields we view as dominated by 1 or 2 players, increasingly that won't be the case. These things don't matter anymore because there are alternatives that are just as good, if not better, in their offerings who've been waiting for that vacuum left by the failure of what have become our legacy institutions, our too big to fails. Except in a monopoly-free system like Bitcoin is, there's no such thing as a too big to fail. And really these are companies that are just standing there as almost roadblocks where they have this momentum. And the momentum with a big company a lot of times is enough to keep you going and enough to keep your customers happy because there's a cost to switching. But that's not the way that things are going to go. These institutions were the first, but they're not the last. You know, Silk Road has 3 or 4 similar competitors who are already fighting over their customers. Gox is arguably less impactful now than ever for the price as far as most people are concerned. And you know, I mean, my favorite price source is Bitcoin Average right now. I think the guys at Invictus Innovations are working on a very interesting pricing model, but right now I'm still using bitcoinaverage.com. And it actually has a button up there that you can select that completely excludes Mt. Gox from the price list, from the pricing equation. And of course, Bitcoin Talk, you know, I mean, Bitcoin Talk for the longest time, that was the only place that you could talk about it. And now, I mean, Reddit surpassed them. I think they have about double the number of users. And if you've gone to Reddit in the past couple of days, you've probably seen it's going actually really slow because most of the people who are still on Bitcoin Talk have moved over. You know, that might be a temporary thing, but it's definitely happening. So the point is that where there used to be one voice howling against the wilderness, we don't live in the wilderness anymore. The entire ecosystem and Bitcoin and cryptocurrency are growing up right before our eyes, and it's happening really, really fast. I'm privileged to devote nearly all of my time to cryptocurrency, and I've really never been more excited than I am, you know, in these last couple of months. I think that we have a lot of challenges ahead of us, but mostly mostly it's permission-based rather than regulatory. So it's been said before, the US has a choice in front of it. We can choose to embrace this technology and see the future and be a vital part of building it. Or we can do everything in our power to try and make it so this is hard, and we'll probably do a good job of stopping it from legitimate uses in the United States, and then get left behind. So The availability, the problem with open source projects a lot of times is that there's too much availability of workable solutions that don't do the job in a way that's accessible to people. This is especially true with the Satoshi client, I think. We're just now starting to see these newer wallets come out that really can leverage and take advantage of, of just some of the basic usability work that's been done over the last few years. So these problems are going away. There's a wallet that's coming out called the Hive wallet that really has a focus on usability and kind of, again, tries to continue this trend of amplifying the Bitcoin experience where anybody can immediately get in. This is sort of a buzzword, but it's really not this hipster thing. It's what needs to happen. We need to focus on usability. For buying products, BitPay is a major player in the space. But at the same time, they weren't trying to reinvent the wheel, as Tony said, when it comes to how we buy things with Bitcoin. So to this point, most merchants accepting Bitcoin use that standard shopping cart flow, where you add a product to your cart, and when you're finished with all of your shopping, you enter your billing information, pay the total with either a credit card or via Bitcoin. But really, Bitcoin doesn't need anything like that. It's a workaround created to address problems associated with identity, because that is, of course, as has been discussed, how our money works. You have to associate identity, acquire authorization or permission, and then you're allowed to withdraw money from that, essentially. But with cryptocurrency, since the holder is the owner, we don't need to do that anymore. And I think that our payment solutions aren't going to require it of us because it isn't actually helpful at all. It actually creates more of a risky situation than you have if you don't do that. So, shameless plug here. Let's Talk Bitcoin has a crew that is filming this event, and we're selling video passes. And if you go to bitcoinvideopass.com, then you'll see our first implementation of what is called the bit credits system. The creator is a gentleman named Alexander who lives up in Canada, and he's been working on this for the last couple of months. And it takes a look at this problem that we have of needing to associate identity, and it rethinks it from the cryptocurrency standpoint. So, when you go to the site, it actually might surprise you, because the payment is actually on the side of the page. It's embedded, and the text that explains it is wrapped around it, because it's just a module. Occupying about 1/3 of the page, and with the explanation text wrapped around it, you don't actually ever need to leave that page in order to make the payment. It just has a little interface up there, and it prompts you for the amount of money that you're going to put in US dollars. It gives you that amount, and then it tells you how much it is in Bitcoin. And you can essentially load this up with Bitcoin, where then we take on the exchange risk and give you back website credits that are denominated in US dollars. You can buy anything on our system. Technically this talk is called Doing Business with a Deflationary Currency, and people think this is a big problem, because who wants to spend Bitcoins when they're hard to acquire and will gain value over time? There has to be a compelling reason, and after my experience with this bit credits thing, I want to share my trick with you. Charge people more who pay in US dollars. You can call it a discount for your Bitcoin price, or you can call it a surcharge for your dollar price, but if you want people to part with their Bitcoins for whatever you're selling, you need to take into account the future value of Bitcoin, because your customer certainly is. And if the mental math doesn't work for them, they're going to pay you in dollars, because why shouldn't they? For our passes, we offer between a 20% and 30% discount, and found that our sales were about 95% Bitcoin. Now, obviously, I do a show called Let's Talk Bitcoin, and we only promoted these to our audience, but my experience has been that when I'm trying to buy something, I spend a lot of Bitcoin. We receive funds from our sponsors in Bitcoin, and we receive donations from our listeners in Bitcoin. And so when I go to spend, it really is a value equation for me, where I'm saying, okay, is it worth it to me to part with these Bitcoin, knowing that at a later date they're going to be worthwhile? And generally, I kind of demand like a 30%. Whenever I'm doing services with someone or hiring a designer or something like that, the discount is generally at least 30%. Sometimes it's a lot more. Bit credits is one option, and I like it a lot because it essentially lets users play the market against Let's Talk Bitcoin. When they buy our on-site credits, all the volatility is removed from the equation. We denominate credits in US dollars, so you can make one transaction on the Bitcoin network to load up your wallet, and any commerce you do on the site is instant and transaction fee free. You don't have to do this, but if you choose to do so, But if you choose to do so, we can take on the exchange risk for better or worse. Right now, you can only buy these passes, which incidentally are heavily discounted over at our table over there for attendees of the conference. But within the next week or two, we're going to roll it out to the entire site. And this is interesting because our show is supported by a mix of listener donations, about 75% of which come in at just under $1. So even in a Bitcoin paradigm, if you have transactions coming in that are under $1 and you have to pay a fee that's somewhere between 6 cents and 25 cents, by my math it's usually about 6 cents, then that actually winds up being very expensive. And it's almost, you're right back up there with credit cards. So there are, of course, drawbacks. By doing this, we essentially take the transactions off the blockchain and we centralize the records of value on our servers, which means that to a certain extent we have responsibility to protect them. But again, we don't have to collect hardly any information. For digital goods, we literally only need an email address. We don't keep the funds on our server. We don't keep the keys for our funds on the server. They go into essentially a black box and then we pull them out, but there's no way to access them through the server directly. Eventually the system is going to go both ways, and the people who write for Let's Talk Bitcoin, when they receive tips, they'll receive these credits that they'll then be able to cash out at whatever the exchange rate is at that point. So the entire time that we're holding, we've taken on that exchange risk. And I think that that's something that is really attractive to a lot of operations like ours, where we do have costs, but a lot more about the tips. I mean, I'd rather pay my costs in US dollars than I'd rather keep my tips. It's really what it's come down to. So there are, of course, others who are trying to find this prize. And the barrier to entry is really low here. And the payoff for whoever nails this content monetization question is going to be really big. So there are some other people who are doing good work in the area. Specifically, the bitwall.io people have a paywall application that's very interesting. And then Bitmonet, which is in partnership with BitPay. And I've been trying to get together with them to learn more about their project, but I haven't been able to make it work yet. But even this is a stopgap for where we're going. Projects like Watershed or eGora, which you're going to be hearing about more in the weeks and months to come, are creating frameworks to build new communities and economies entirely on top of, with cryptocurrency baked in at an infrastructure level. And I'm especially excited about a project called NetBend that, again, I want to learn more about, but you can think of it like a simplified cryptography, or rather, a simplified cryptocurrency infrastructure that lets those wanting to build any kind of complicated service that involves a lot of money routing around or going to various places to essentially plug it in, kind of like you would with, with a little starter circuit board, where like all the underlying wiring's there, you just plug in the various modules that you want. In expertise, as with everything else, cryptocurrency is a meritocracy. The people who are up here as experts, generally speaking, are because they want to be. Because they're passionate about the future we can create, and instead of waiting for someone to tell them what to do, they followed in Satoshi's footsteps and just did it. I've got a saying that I've been saying a lot. It doesn't matter that I do this now, but in 6 months, it will have mattered that I did it 6 months ago. I think that Bitcoin, that's really it in a nutshell. Everything is so positional right now, and to mix metaphors, we are arranging lounge chairs while the tsunami approaches, bringing with it a very different and hopefully a much better world. Thank you.
This is about coyote. Please explain to me how it's the difference of, I like the simplicity versus the complexity, but it does seem like it goes back to the centralization idea. You're asking me to trust one entity instead of multiple entities, and with ultimate control, comes ultimate power and ultimate corruption. So how am I not trading in that complexity for the lack of autonomy?
So three reasons. Number one, it's decentralized software. It's in a GitHub repo. It's completely open sourced. The code, we're not selling it. You can download it, compile it from source. You can audit the code yourself. So if you have trust in Linux, you have trust in these kinds of solutions, then we're at that same level. Second, there is no server that you're hosting any information on. All your public information always is going to live client-side, and if it lives in a blockchain, then it's going to live in some form of encrypted form that's tied to your coyote ID that only you have the ability to access. And third, we're going to build in multi-factor authentication using best practices. So we're trying to actually kill passwords as much as possible. They're very bad things for privacy and security. But we believe when you remove data replication and you remove the amount of people that you have to trust with your identity and a whole bunch of other things, and you decentralize that as much as possible, you can dramatically reduce identity theft, fraud, and also malfeasant actions of governments.
wasn't stated to my questions about domain shares. Okay,
Daniel.
Oh, okay. So under the domain shares model, after that initial land rush sunrise phase where the domains are on auction and the proceeds go to the domain shares holders, not the owner of the domain itself, can domains be transferred after that phase between private owners?
Yes.
And then who gets the proceeds to that?
The person who's selling it. Once you own a domain, you own it forever. And there shouldn't be a land rush, except for people that don't understand how the economics of the system works. Because you actually make more money by holding the domain shares rather than spending the domain shares. And only whenever you have a business or something to do with the name does it make sense to turn your domain shares in for an actual name.
But if well, we'll talk about it offline, but if the name holders can then transfer the name for private gain later, you haven't eliminated the squatting problem. And if there's one thing that domainers excel at, is gaming the system. So whatever you come up with to try and tease that part out, they're mercurial. They're always going to get around it somehow to get that, to corner that private advantage.
We very carefully engineered the economics of the system. Of course, we'll have to test it to make sure it works like we expect. But it should be more profitable to hold the domain shares because you get a cut of everything. Everyone who owns a domain share is literally squatting on all names. If you pick one name, you're going short domain shares and long just that one name. People can pick other names to go to. So there's also some gamification where everyone in the market has financial incentive to bid up the name that you want, and they can make money by doing so, which makes it very hard for an individual trying to squat on names to buy thousands of names at a fixed price. The reason why I don't like the way Namecoin works is because of price fixing. Every product we do, we try to eliminate price fixing, and anyone who follows auction economics understands the importance of that. So those are the principles we have.
Besides price fixing, are there any other issues that you see with Namecoin versus domain shares?
I really like the dividend system. We use that a lot because we like to view blockchains as decentralized autonomous corporations that are operating on a profit basis. And anyone who owns the cryptocurrency, stock, crypto equity, like we like to call it, earns a profit by doing so. And we believe it's a new way of looking at things that breaks the paradigm of Bitcoin and altcoin. You don't want to say, oh, you can only have Apple or Google or Microsoft and they all have to kill each other. They're each providing a different service to the market. And you can use these types of systems to engineer market forces to provide goods and services to society in a decentralized, government-free manner.
On the coyote topic again, how are you guys, since you can't transfer or sell a name or registration, how are you going to deal with key revocation in the event that somebody loses or misplaces or has their private key stolen?
You can revoke a name, but you cannot transfer it.
How would you handle a situation where someone has a key log installed on their PC or something, and they don't, a third party gets hold of that root key? Maybe they don't even know about it. I mean, is there any kind of a facility for two-factor authentication or anything like that?
As Charles said, we're looking at two-factor authentication, non-keyboard-based password entry. We're going to try to adopt as many best practices as we can find. All for software, so anyone can take it and add these features if they want to have more security. Yeah, and there's also a hardware solution we're working on.
So that all two-factor?
Yes, our hardware does more than one thing.
Under coyote, you said it would take an hour's CPU time per year, correct?
Yes.
So I'm on for an hour, I get my ID, and then you said I have to re-up it. So
Yes.
let's say I don't re-up it. What happens? It gets mothballed, and then I'm forced to mine because I need to use it, but I can't use it.
If you do not renew your name within a year, it expires, and then someone else can re-register it. And of course, reputation is reset to 0 when you do so.
Okay.
So,
So one of the problems I was seeing when Namecoin was kind of beginning, people were playing with it, is it was so difficult and complex for the average user to use. So how does your system kind of solve that problem in terms of really just having, basic tools like a Chrome plugin or whatnot, just so the average user can just click, okay, this works, I can use it. Versus again, Namecoin is just so technically complex, you have to set up a million names just to make it work.
So Coyote is our solution to that. It's a graphical interface. It's going to do both the bitshares exchange with all the features you'd expect from Mt. Gox, only with shorts and options. It's also going to allow you to buy domains, and it'll manage it all for you in an Apple-like experience. That's what we're going for in everything we do. We really believe that security depends upon ease of use. The reason why PGP is not secure is because it's so difficult to use, people don't use it. And we want to do better than that, because it's better to have automatic ease of use security than something that's hard to use and then doesn't work.
Coyote, do you have anything in place to prevent false or double identification? Like somebody using two unique IDs?
Oh, for Coyote?
Yeah.
Yeah. Well, you can find it.
Yes, so you can have as many pseudonyms as you'd like. Is that what you're asking?
Oh, okay. So it's not necessarily not necessarily to facilitate a singular ID. It's to have a reputation associated with a particular ID.
Right, so each name that you register is a unique identity, and you can have different identities for different places. So you might have your real world identity for when you're dealing with your banks and the exchanges and things like that. And then you might have another identity that you use in your blog.
Questions for Charles. It's a mysterious piece of hardware you have. Can we pre-order? And will you say be ready in about 2 weeks?
Bruno, I love you, man. And as I look at that KNC miner over there, when we're absolutely confident and ready and we know the supply chain is good to go and we actually have something in hand that's not a prototype that we can ship in production, then we'll accept pre-orders.
Take my money down.
Just a quick question. I know it's being used for, or will be used for authentication on third-party sites, but will it have a functionality of, say, encrypting messages between, like being able to send encrypted emails easily?
Yeah, actually, we looked at BitMessage as inspiration. So we really like BitMessage for two reasons. First off, everybody has a public-private key pair, so it's like PGP is default. It's full CNA experience, right? Confidentiality, integrity, non-repudiation, and authentication. The other really nice feature of BitMessage is broadcast, which is not scalable, but it's a really nice feature for true anonymity, because it's really difficult to pinpoint who you're sending the message to and where the message was sent from. So for clandestine operators, that's a great thing. So we're going to actually have two features that launch in the beta this time in December. We'll only have broadcast available, but sometime next year we're going to go ahead and do direct connect. So the points will still be encrypted, but you lose the repudiation of communication. And we'll also roll out chat and a Skype-like experience with that at the same time. So you'll have email chat and VoIP. All encrypted. All encrypted, that's correct.
That's good last line. Do you have any plans for top-level domain integration to bootstrap the domains?
Yeah, that's going to come later on, and we're speaking in Vegas in December, so we'll probably go into a bit more detail about that. We also have an app store we're planning for Coyote. So once our software is completely constructed and ready to go, we'll have an API, and anybody who wants to build an app on top of Coyote and sell it through Coyote or give it away for free through Coyote will be able to do that. All right, thank you very much.